Hi, folks. Today we're going to talk about a conversion story. No, I don't mean a change of beliefs, if that's what you might be thinking, but rather a change in situation and a client's financial plan. The client, let's name him John, had been introduced to me by a friend 10 years ago, and we developed a financial relationship together right from the start. At the time, John and his wife didn't have any children and both had decent jobs. We decided when looking at the risk protection area of his plan that we need to get some additional life insurance in place. John only had a small work-provided life insurance policy, and that was not going to be enough income replacement for Sandy to maintain their standard of living. They also communicated to me that they had planned on having kids, and so we decided to put a little higher amount of insurance, a death benefit in place to account for future mouths to feed. After a number of years with the current insurance in place, it came to our attention through further discovery with John and Sandy that their needs had changed. John had been making more income and wanted to preserve more of that for his family if he were to pass away. We looked at getting more insurance for John, but it turns out that due to his health not being what it once was, that getting the same rating and coverage was going to be much higher cost than he had initially had with his current policy. The current insurance plan he had was a 20-year level term policy with a great AAA rated insurance carrier. Now, that particular carrier had a conversion privilege within his term insurance policy to move all or a portion of his current insurance amount over to a permanent insurance product with the same insurance company with no medical review or underwriting required. Just a signature and a check was all that was needed to change the policy. Now, doing this instead of replacing the coverage allowed John to build value in a new policy that gave him the lasting insurance coverage he was looking for. Now, why might someone convert their term insurance over to permanent insurance? Well, in John's case, it was because he knew his health wouldn't allow him to get permanent insurance coverage favorably in the future with the same good health rating he once held. He wanted to lock in the policy, and now he'd have something that lasts as long as he did if funded properly. Another reason someone might want to convert their policy is perhaps at the time of getting the insurance plan together, they might not have had the financial means to make a larger financial commitment to funding their insurance program. Since most permanent insurance policies, because of the cash value growth involved and long duration, require a higher premium than level term insurance policies. Some of these types of insurance conversions from term insurance to permanent insurance also allow for a single premium payment. If someone were to inherit some funds or come into a windfall of some sort, it might make sense to convert and make the one payment to fully fund their insurance plan, thereby eliminating any potential future out-of-pocket costs. A business owner client of mine also chose to convert the insurance that was tied to him and his partner's buy-sell agreement is so that they could start self-funding their own buyout someday rather than the insurance only being there to buy out the other partner at death. I must add that these insurance conversion options within many term insurance policies out in the marketplace vary from carrier to carrier. Some allow you to a 5-year period from the start of the policy in which you could go back and convert the policy as if you had purchased the permanent policy from the very beginning, thereby allowing you to have all the cash value and growth of that cash value as if you had owned the policy as a permanent contract all along. This often requires a person to pay the back premiums, but could be a great way to really enhance these values than that of a attained age or current age, like in John's case, conversion, where you start from scratch. The most common type of conversion is the current age conversion, where you convert, like John in our story, and start your new policy at your new current age. Now, not every company allows these conversions, however, and if you are considering this as a future option for your insurance plan, you might want to have some term insurance with a very highly financially rated company so that you can be sure that you have some of the best permanent insurance products to convert to on the market. Be sure to check with your agent or advisor in reviewing these options so you don't miss the deadline when these privileges expire. You don't want to be caught uninsurable or in really bad health ratings and trying to get different life insurance because you have no good options other than to pay your ever-increasing term insurance costs. I hope you found these concepts I've shared with you today valuable and perhaps gave you a few things to discuss with your family as you continue to plan your journey down your own financial path. If you found this video useful, please hit the button below before you go and share with someone you care about. Until next time, keep doing life better.